Despite its sympathy partner, this asset has faced trials and tribulations when it comes to price. I do see a glimmer of potential, and it has to do with a critical demand. Now, pair that critical demand with a bullish macro time formation, and you might just have a surge. Welcome back to the channel on this Thunder Thursday. This is ARCa, and let's dive into ticker symbol GTII. What is up, you guys, and welcome back to the channel. Let's go ahead and dive in to GTII, and what you are observing here is the weekly time frame. So this is a macro time frame formation that I have been taking into account over the last couple weeks. All right, so this actually, let me see if I can view this better in the 3-day chart. And actually, yes, I think the 3-day chart may be displaying something for us, but I need you to notice here that it does have two formations within the one. First of all, yes, we do have a bullish formation being the falling wedge. Okay, so seeing that price action is now approaching the critical area where there could be a breakout. Usually, I mean, please remember that these triangles tend to break out at about 65 to 75% to the apex of that triangle, this being the apex. Right, so I have two targets for us to observe. Okay, first of all, being here, that would be 49.52 bottom at around November 24th. Okay, now if we were to continue on to the downside here and favor the smaller time frame, right-angled descending broadening wedge, then we have to move this down to a shorter time frame, maybe even into the 12-hour. I can see this actually doing it maybe even on the 4-hour, right? Yeah, something like this, right? We can actually see this bottom side fulfilling at around November 15th, which could be right down here at 49.44, or the 45.66 cent bottom on November 20th. So still the dates are very, very similar. Okay, so I'm not sure if that's going to be the case. The thing is that I'm basing this around, a continuation of 3 moving averages, extremely low volume, high contraction on volatility, right? So the thing is that as this continues to the downside and we have diminishing volume, that usually means that the bear thesis is kind of slowing down. Right, specifically this on a daily time frame, right? We are essentially slowing down a bit, right? So now these bottom side targets that I'm providing for you are actually it's one of the critical demands, right? And specifically one being this 45-cent bottom that I spoke of when we were at around $3 way up there. And, I spoke of this being the higher probability target for us to reach. In fact, I said 47 cents, and 45 cents ended up being the bottom side before us eventually making a rip to the upside to 203, pulling back, and then a 298 top, making a complete 550% move out of a supposed 3,000% move of the upper bound of the first standard deviation months and months back. Right, so this present formation could be in line again, seeing that we have critical contraction yet again. Right, so if we pair the critical contraction on a daily time frame with a momentum pivot towards the upside, then that can lead to some pretty exponential moves. Okay, so but remember that it was on the 5-day time frame that we looked at. Okay, so now if you observe the 5-day time frame, well, what do you know? We actually have some correcting pivots as we speak. Look at this. We have contraction right now starting to expand from critical volatility, and this pivot is starting to correct on the stochastic momentum. Okay, so that could be a signal here that we may have to take into consideration into the coming weeks. Okay, I would say maybe 2-3 weeks, somewhere around there. We'd be able to present a bull thesis right within this point here. We are critically oversold, and I must admit that we're not oversold into historic levels yet, but it's pretty damn close, right? So let's just go ahead and point let's just go ahead and point at the 45-cent bottom that we faced, and that would be right here at about 4.83% stochastic, and we are currently sitting at about 8.51% stochastic, which means that, seeing that we're at 56 cents and we still have a little bit of ways to go, then there could be that situation till we face the bounce. One more thing to observe here is that we can take into consideration this regression, right? There is an apparent trend line rejection of this rejection of this regression, blah, blah. Can't say that. I can't say that right now, especially with my voice being so hoarse, and I lack authority, damn it. Anyway, yeah, the rejection of this regression is actually something that's very apparent. Although I would have to say that it may fail it, right? Because it's still kind of a critical downside pivot. And I mean, unless this thing just pivots out of nowhere, just like this one did here, when we got this bounce from 61 cents all the way up to 96, then yeah, I guess I could see that potentially happening. But I mean, for the foreseeable future, with low volatility like this, I mean, notice a difference here, right? Notice a difference that right at this pivot, we were up here and expanding near the mean, right? So we're barely coming out of critical contraction at this point. So that's why I'm saying that I don't know if we can actually face that critical pivot out of nowhere. Anything's possible in the markets, but I mean, it is kind of what it is, right? Okay, so let me go ahead and take a look at the 30-minute time frame here. And you can see here that the 30-minute time frame is absolutely critically contracted with a massive downside pivot on the stochastic momentum indicator, okay? It looks like, let's see. It looks like we do have a short-term upside, but it's just some of that barcoding effects that we're getting, right? I mean, you can clearly see it here. We're just barcoding around ranges. We need to gain some interest back into the asset, and I don't think that there's going to be interest in it as soon as it reaches those critical demand, or at least the first critical demand out of many that it does have. Okay, so yeah, this is. I mean, what I will say is that around these targets here is usually where you get those pops to the upside out of nowhere, right? So I guess if you are accumulating here, then cool. But I mean, it's just, in my personal experience, team, I hate looking at this, as there is a potential for you to be trapped for an infinite amount of time without knowing without any specific catalyst. And to tell you the truth, I don't know of any of them coming in for GTII. So please go ahead and share those potential catalysts for me to evaluate with you. Okay, so we can go ahead and start a conversation in the chat. Come by the Discord, and we can go ahead and strategically talk about some upsides here, right? So if we're gonna be looking at an immediate short-term upside, of course, the EMA 21 on the hourly time frame appears to be that new zone that we are combating, and so that could be touched again anywhere between the zone of around 56.72 to a top side of about 57.04, being this enormously barcoded top side, right? So let's just go ahead and observe price in the coming days and see what we can do about it. But for now, team, I am still bearish the asset, and I do believe that it has the potential to continue to the further downside, to include some bulls waiting at that critical demand. Please remember the targets that we spoke of on that demand. Let me pull this back up to the daily time frame and show you those targets one more time. 49.52 to 45.66. Any questions or concerns, please go ahead and get in touch with me. But that is it for this video, team. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest, and I repeat, I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well a very, very good rest of your night, and I will catch you at the bell mañana. Adios.